Investor Intelligence provides general information only. You should consider seeking independent advice to see how this information relates to your unique circumstances. Please refer to the terms and conditions available at investorintelligence.com.au for more.
Guys, welcome to this week's episode of Investor Intelligence, brought to you by the team at the Property Mentors. It's your weekly podcast for all things investment and hosted by me, Phoebe Sikowski-Wallace. Now, I've spoken to many property investment related experts since we started the podcast, but one that I haven't yet, which gets mentioned quite a lot and, time and time again, is a property developer. So I asked Luke who would be the best developer to have on the show, and without hesitation, he gave me the name of today's guest, and that is Mr. Andrew Purdie. You may recognise him, or you may recognise his voice in this case, from the show Australia's Best House, which he is a host. He's also the managing director of Bennett Williams, which is a full-service property development company. He also recently launched the Purdie Foundation and soon to launch his own podcast, The Hidden Philanthropist, which we'll get into a little bit later. Bloody hell, Andrew, you're a busy man. I'm surprised you've actually had time to sit down and talk to little old me today, but welcome to Investor Intelligence.
I'm a bit scared that you threw the word expert in introducing your past guests and putting me in the same sentence. I might let you down today. You are
definitely an expert. You are most certainly an expert.
Thank you for having me on your podcast. It's great to be here.
Of course. So, given that long list of accomplishments, you're a bit of a household name in Australia and a very successful developer. Let's go back to the start. Tell me a little bit about that journey and how you got to where you are today.
Yeah, sure. I fell into property development, so I'm probably the least likely candidate when I look around my sphere of influence, my peers, and their backgrounds and how they got into property. I had no family background in property at all. I finished high school and got a trade, so I did an apprenticeship, got a trade. Didn't really enjoy that and got into real estate. So I got into real estate sales, entry level as a salesperson. I got to experience and learn a bit about property, maybe not so much the development side of it, but was exposed to a bit of property development, exposed to real estate in general, and it sparked a passion inside of me. I wasn't amazing at it. With growth in my career has come growth in responsibility. I was a bit crazy back then, so real estate and sales didn't exactly go hand in hand for me. So I went back to my trade, where I built up a plumbing electrical company over a couple of years, over a number of years. And that development company integrated back into the real estate sector, where we provided maintenance, plumbing electrical maintenance for the real estate companies that I built relationships with and grew it from there. So that grew to be quite a big company. And more than anything, it provided me, albeit I wasn't super passionate about it, I derived a really good income out of it. It helped me with cash flow and it gave me serviceability to be able to get in and borrow money and start doing property development. So I started building one townhouse, two townhouses, doing a few renovations, and running my plumbing and electrical company. So that was certainly my focus, because at that point in time, that was really my success. I was earning good money from it. I was doing property development, and then came the opportunity to get out of that, which I did. And having come straight from high school into my trade and real estate, I really had nothing else that I could do. I wasn't educated in anything else. I hadn't done any sort of further studies or education outside of my trade. So I got back into real estate, which probably looked different for me this time round than it did the first time round. And by that, I mean I came in at an ownership level and owned owned a real estate office and had a bit of an agreement with the guy that I went in with that I would do some property development. At this time, I didn't really know what it was to be a property developer, I've got to say. For me, I still had this image of what a property developer did, what property development was about from what I was exposed to in my real estate career and in the very limited experience I'd had in building some townhouses. But I knew that that's what I wanted to do. So that's how I got back into it. And I guess that that was the turning point for me, where I knew that property development was something that I wanted to make a career out of. And I'd learnt enough through building townhouses to start doing it at a level where I could make a living out of it. And I never really understood how much energy and time and money it was ultimately going to take to do it on the scale that I ended up doing it at, because I sort of thought that building townhouses was relatively easy. But I learnt as my journey went along, and I grew in my career, and it literally organically grew from having this agreement where I had the real estate office and I built some townhouses, to building a couple of townhouses, to building 10 townhouses, to building 50 townhouses, to building 100 townhouses, to ending up, I guess, where we are now, which is a proper diversified property company that does land subdivisions, townhouses, luxury homes. We're in the finance space, so private equity, private debt into the development industry, so funding of other developers, and now into our lifestyle villages. So it's changed over time, and most of that change has been organic change. Simply as I've learnt more, I've have an appetite for property, and as I learnt more, I've continued to take on more.
So you think you kind of fell into real estate, and then from then you just sort of grew and grew?
100%.
Yeah, wow.
When I finished high school, I had absolutely no idea what I was going to do other than get into trouble.
Okay.
Like, I was naughty and I didn't know what I was going to do. There was no inkling or lead up to me becoming a property developer from when I was young.
Yeah. It's a good way to fall into it, at least. Like, at the start it might be like, this isn't for me, but it's amazing when you stick to it.
It's worked out well. And it's all about passion. You've got to love what you do. And I was lucky enough to find something that I love what I did, and that's really fulfilling.
Yeah.
And I take great enjoyment and satisfaction from what I do in my career, and that's a real blessing.
Yeah. So if you sort of fell into it at the start and you would have, viewed it in a different way than you do now, why property now? What makes you passionate about property now?
The journey is something that I really enjoy. I actually love property, and I love the challenges that come with it. And I've got to say, there's been far more challenges in my property career than successes. And I mean, success is measured in so many different things. And one of the main things that I don't measure success in is necessarily monetary or fiscal, actual wealth. Success looks like so many different things. And to be able to get in at the very start of a project, have a vision, to be able to get it to the point where you can commence it, deliver it, and see it through, it's really satisfying. And I've had passions throughout my career that I've been able to go and set about and pursue. Affordability issues with first home buyers, where I've gone and sourced projects and targeted them specifically at helping first home buyers get into the market. I've got a passion for luxury homes, so I started up a high-end building company and spent a time there delivering high-end homes on the Mornington Peninsula. And then, addressing affordability issues and supply issues in land in rural Victoria and the Victorian growth corridors. So we do a lot of land subdivision. And look, that as we've evolved, it continues to evolve. I certainly don't think that, I have so much more to learn. I haven't learned, anywhere near as much as maybe what other property developers have. I've certainly recognised, I hope I've recognised what I do well, and I've continued to do that. And then as I've continued to learn, I've branched out into other things and done I've done what I've enjoyed, and I've been really lucky to do that.
Yeah, how exciting to be that far into your career and still having that mindset of there's still so much to learn. Like that's 100% the way to have it.
It's good. I love it.
So I know from a lot of conversations that I overhear, the mentors having with people, that people can often conflate investors with developers. So can you, in your opinion, give me a rundown of what the difference is between an investor and a developer?
Good question. A really hard, when I say really, like on face value, super simple question to answer.
Right.
And that would be, I would say an investor is probably a more passive position where you're looking to invest to potentially, well, not potentially, usually I would say 9 times out of 10, to increase your wealth, to put money that you may have into a secure position. I think that for people that are getting into investing, property is not necessarily easier, but I think basic entry-level investing in the property market is easier than basic entry-level investing into the stock market. So there's things like investing in the stock market, bond market, trading in commodities. There's all these other things, derivatives, future trading. You can talk about all these different ways to invest. But on face value, I think it's potentially easier in Australia to get into investing into property. And all Aussies love property. I mean, the Aussies' dream, Australian dream, is to own your home and pay it off.
Yeah.
So property resonates with people, and I think people enjoy investing in real estate. So across the board, an investor is probably someone looking to create wealth, get into the property market, is looking at things like property trends, areas where there's potential future growth, whether it be through infrastructure or whether it be through a whole variety of things. So they're wanting to look for capital growth. They want increased value of their asset, and they're looking for yields. So they're looking for things like occupancy rates, vacancy rates, and things like that. So, and at times those two directly oppose each other. So in areas where you have high capital growth, you might have low yields and things like that. But you can get your head around that. You can take a passive position, and albeit that the Australian property market is cyclical, it's safe. So yes, if you look back over historic property data, we've had peaks, we've had troughs, we've had highs and lows in the market. However, it's always continued to move forward on an upward cycle or an upwards trajectory over time. So I think that's what on face value an investor is. There's someone that's looking to invest in property for growth and a yield. But where I said it gets complicated, I mean, that changes where you can sort of integrate development into being an investor. So you might have your first investment property, your second investment property. You've built up equity in your property. You then may look to invest in a property where you can build a townhouse in the backyard. You could build 2 townhouses in the backyard. And that's where I guess that investor crosses the line into starting to dabble in a bit of development. Whereas a developer, I can really only speak for me in terms of what my vision is and how I run my business. Unless you're in the build-to-rent space, OC rates and vacancy rates, debt serviceability, cap rates, things like that, cash-on-cash return is not something that we necessarily look for. I'm probably looking for, rather than looking for an area with future capital growth, I'm probably looking for an area of current market stability, so that when I'm buying, I'm trying to buy, develop and sell in the same market conditions.
Right.
And that enables me to keep my figures as accurately as possible. So we work on things like an IRR, which is internal rate of return. So that's how much money I'm making on my money that I'm putting into the project.
Gotcha.
And things like return on, we call it a GRV, which is a gross realisation value. So the total sale of assets in your stock in your development. And out of how much you've sold all of them for, what percentage of that was your profit?
Okay.
So the way to most accurately arrive at the figures is to be buying and selling in the same market conditions.
Okay.
Because if we buy land and we calculate that we're going to develop it and sell blocks for 250 grand each, if the market crashes and we're selling them for 200 grand each, we're losing money.
Right.
So I guess we're looking to buy and sell in similar market conditions, security of market conditions. And then we're looking for areas where there's buyer demand, and buyer demand might not necessarily always look like the same area where there's high occupancy rates for investors. We might be looking at areas where there's employment opportunities, where there's first and second home buyers going into the marketplace.
Right.
So look, we're watching market trends, absolutely. But as a developer, I'm looking for different things that an investor's looking for. So mine's really, I'm not necessarily looking at what I invest today, what's that going to look like in 10 years. I'm looking at what I can do today and what that's going to look like in 12 months, 2 years when I finish my project and I'm out of it.
Yeah, okay. I can definitely see the difference, but I can also see the sort of blurred lines as well. Like, as I think that's a good way to look at investing. It's a little bit more passive, and developing is probably that little bit more. I say a little bit more. It's probably a hell of a lot more hands-on. But just like the different outcomes, slightly different outcomes, that is the main difference.
I think the other main difference is how we make our money.
Yeah.
Like, an investor makes their money predominantly through capital growth.
Sure.
An investor's looking for tax breaks, tax benefits through negative gearing, or they're strategizing for additional income by trying to find cash flow positive properties, things like that. We're probably looking for a value shift or a value uplift through things like subdividing land, buying land and building on it.
Yeah.
Doing things like that. So ours is immediate to short-term improvement to land.
Yeah.
To extract value out of it. And investors, a basic investor is looking for capital growth and rent.
Yep, I think that's a perfect way to sum that up.
Does that make sense?
It does. No, it really does. Yeah. But something else I kind of hear over here in the office with the mentors talking to people is that people want to become developers. So I don't want to say developing sounds more high risk, but as I said, it sounds a lot more hands-on than investing. But why do you think people want to become developers?
I've got no idea.
Okay.
Don't do it. That's my advice to anyone. I'm only joking.
Luke said you'd say that.
My advice to anyone that wants to become a developer is always don't do it. You know what? I guess it is risky. And why I say it's risky is because unless you've got a significant investment portfolio as an investor, 9 times out of 10, you've probably got another stream of income. You're usually employed doing something, and you're investing as a side gig. As a developer, you've got for me, it's my only real, outside of other things that I do. For a long time, that property development was my only source of income. And it's super lumpy. So if you're doing 1 or 2 projects a year, when those developments settle, that's really the only time that you've got money coming in.
Right.
And if things go wrong with development, quite often you're talking large amounts of money. So if your tenant doesn't pay, if you're investing in your tenant doesn't pay rent and you've got to kick it in, you're kicking in $500, $600, $700, however much rent you're getting for a week on a shortfall against your mortgage repayments. With property, when it goes wrong, often you're talking millions of dollars. And that profile, that risk profile against an investment property compared to developing a property, I guess if you take an investment to the bank, you know what your LVR is, you know what your mortgage is going to be. And 9 times out of 10, if you got your deposit, you got your stamp duty, you got your rent coming in, you're set and forget.
Right.
Development is an ever-changing beast. You're up against councils that are forever changing policy. It comes down to councils' views on development at a particular time. It's often political. The banks change their positions depending on what the profile of the development, the risk profile of the development looks to the bank. So you've never really got absolute certainty of what your outcome is.
Okay.
With that, at times comes wins. With that, at times comes losses. What I would say is, that I would agree that being a developer is riskier because I think you're exposed to potentially much greater losses if you don't do it properly.
Right, okay.
And like with every industry, knowledge is key. Knowledge is king.
Yeah.
So if you don't know what you're doing, and I think a lot of people get into property development on entry level, potentially because like I did early days, because they have this preconceived idea or preconceived concept of what being a developer is.
Yeah.
And it's just like most things in life, like until you get into something and you really know it, you actually don't know what it's about. And sometimes it's recognizing what you don't know that protects you from risk. It's when you go into something thinking you know everything and you stuff it up, you'll lose big time. And I think if you only need to pick up the Financial Review at the moment to realise that, the ratio of passive investors going broke compared to developers and builders. I mean, developers and builders are going broke all the time at the moment, because it's an ever-changing beast with political and the economic climate at the time.
I think everyone's kind of gotten to that point at some time in their life where they've tried a new career or tried something because they've only really looked at the perks of something, and then they get into it and they're like, oh shit, this has got a few more challenges than perks.
100%.
Yeah. So what does it take to become a developer? And going on from that, what were the signs that you knew you had what it takes?
I had a passion for it. And it would be remiss of me to sit here and say I haven't made a heap of mistakes. Absolutely I have. I've always been relatively conservative. I've got a corporately aggressive nature in regards to pushing myself and pushing my business and learning more, but in terms of actually taking on risk, I'm relatively conservative. So, I have a passion for it. I love doing it. I've never been a huge risk taker, so I haven't ever really faced massive adversity in doing it. So I think that's what potentially, I wouldn't say that I'm good at it. I'd say that I've done my best.
Yeah.
I've had a good career. I've been very fortunate. What makes me good at it? That's a really hard question to answer, other than reverting back before to knowledge. I'm certainly someone that is not necessarily always ego-driven. So I'm willing to recognise when I don't know something. And when I go into development, so I do a risk analysis of each project. I recognise what I don't know, and I get the right consultants on board.
Yeah.
And I build a team around me of people that can do it.
Yeah.
And by doing that, you mitigate risk. And am I a good developer? Maybe not. Is the team that I put around me good at doing development?
Yeah.
Absolutely.
Okay.
Absolutely. I think I've got an incredible team. I've got great consulting engineers. I've got great town planners. I've got great surveyors. I've got great accountants. I've got great... And some of those I use externally. Others I bring into my business. But I've certainly got a great team of people around me.
And it would definitely take, passion would be a big part of it, but it would obviously take quite a strong work ethic as well. Where do you think you get your work ethic and your sort of drive for success from?
I don't know. I've been asked that question a few times at different points. I don't know.
Or who do you get it from, maybe?
I think there's a lot of qualities within me that I get from my mum. We're very similar. I was brought up in a single parent home for a long time. I'm certainly, but in saying that, my mum's definitely not corporately aggressive. I mean, she's super successful. She's a family lawyer. She became a lawyer later in life. She was a fantastic mum, and she instilled fantastic qualities in me, or some of my qualities. She'd probably say I'm a pain in the ass. That extreme corporate drive is potentially not one of them. My mum's probably more passive in business. I don't know is the answer. I don't know. It's not an ego thing. And I know for sure it's not a financial thing, because I think at the moment I'm in this massive transition in my life where I've recognised that money doesn't make me happy. And I have amazing holidays with my family. We have nice things. Everybody likes nice things.
Sure.
But to have wealth beyond what is required is not something that sits high on my priority list. So it's not money that drives me. It's not necessarily ego. I don't know that it was something that was instilled in me as a child. I love what I do. Even in my trade business, I've always been full on it, pushing me to do the best that I can. But hard question to answer.
Maybe you don't need to know.
I've never got to the bottom of it.
Yeah.
I don't know. I think not doing my best or not pushing myself as hard as I could possibly push myself doesn't sit well with me. So but the reason behind that, I'm not sure.
Do you have a question about investing that you'd like answered? Each month, we take questions from our listeners and put them to our resident expert, Luke Harris. With more than 2 decades of residential and commercial investment experience under his belt, Luke has seen the best and the worst of the property market. Have a burning question you want answered on an upcoming episode? Visit investorintelligence.com.au/questions and ask us today.
So I know you've worked on a fair amount of projects in your time in multiple states in Australia. And just kind of going back to the topic of risk, what would be one of the biggest risks that you've taken and did it work out?
You know what? I've taken risks that have worked out and I've taken risks that haven't. I've tried to always make sure that when I'm going into something, if it doesn't work out, it's not going to sink me.
Yeah.
I'm very wary of my obligation to my staff, in particular in my family. Mm-hmm. So I try not to be irresponsible, but I've absolutely taken risks, probably earlier in my career.
Yeah.
I bought developments that potentially were outside of my scope of being able to get through, but I've fought through them and I've done what I've had to do to get out of them, and I have got out of them. So in hindsight, potentially I probably shouldn't have done them, but I got out of them. So
do you think that conservative side of you kicked in
probably,
because of those? Yeah,
probably. I probably could have taken more risks. Mm-hmm. Is the answer. I think, especially now where I'm at in my career in terms of opportunity. I think as your sphere of influence grows and your network grows, the more opportunities get thrown across your desk. It's pretty easy to get excited and want to do everything.
Yeah, of course.
But I try not to take too many risks. I try not to take on or make me believe or anyone else believe that I'm capable of doing something that I'm not. So if a good deal comes in, it's in my wheelhouse, I know I can do it. Yeah. I'll do it. There's a gentleman, I won't say elderly gentleman. I mean, he doesn't listen to podcasts, so I can probably get away with it. But there's a guy up in Queensland that I've had as a mentor for many years. I ring him all the time. I fly up and spend time with him when I can. He's conservative, so I think sometimes maybe when I think that I'm better than I am or I need pulling back into line, he pretty quickly reminds me.
Yeah, he humbles you.
So
yeah.
I'll ring him up and pitch a deal to me and he tells me I'm dreaming.
I love that. Everyone's got to have that person that just brings them back to earth.
He's great and he does it really quickly.
Yeah. So as far as your the designs,
yeah,
what inspires your designs?
Good question, because I had a building company. I couldn't build a cubby house. I've got absolutely no concept of construction and design, so to speak. Mm. I know what I love. I can go into a property and see if it's been built well. Okay. I know if I like it. I know what styles of home I like. I know through traveling where I've seen particular architecture that's blown me away, and I'm like, you know what, I'm going to bring that back to Victoria. Mm. I love that Canadian / Queenstown in New Zealand. You go to Queenstown or you go to Vancouver, you could be in the same place.
Okay.
And there's a lot of that architecture that I really, really love. So I've seen it and I've thought, you know what, I want to bring that back and deliver that in my backyard in Victoria, in Mornington Peninsula. So I've done that. I've drawn inspiration from things that I love. But again, when I've wanted to deliver them, I've put people around me that are able to do that. Yeah. So I get a really good interior designer and I show her pictures of what I want. And I got teamed up with some really good builders and that's probably the most honest answer that I can give.
No, we love honesty. And so what are you currently working on now? What does the future look like for you?
Yep. So we're at the moment, our core business is regional land subdivisions. So I think post-COVID, and I'm almost contradicting what I said earlier about I don't look at trends and But I guess I do to a great degree. There's absolutely this thirst in the Victorian property market right now for transitioning to regional Victoria. And when I say regional Victoria, I'm talking an hour and a half from Melbourne CBD, so 2 hours from the CBD. I think the Bass Coast is super hot at the moment, or has been. The Surf Coast, Ballarat Peninsula is really hot. Mornington Peninsula is hot. So our core business right now would be regional land subdivision, because I think that's where the market's at and has been since, the middle towards the end of COVID. And we're getting heavily into the lifestyle village space. I think at the moment there's a massive affordability issue in retirement in Australia. So, and that's only increasing. So we're getting into affordable living in retirement space, in lifestyle villages, and our next big push, really big push, will be social housing. So probably getting away from built form now. I think my days of building townhouses and building homes and building and engaging in delivering built form is probably behind me.
Okay.
And the only reason I say that is I'm not stepping away from the business, but I'm wanting to take on less stress and less complications in my business, and land subdivision for me is easier than delivering built form. So, the future of our business will definitely be land subdivisions. When the market trends change, that'll come back into the growth corridor, and we'll look at doing house and land packages or land for builders to house and land packages on. At the moment, it's regional Victoria, and lifestyle villages. But I think ultimately, in 10 years from now, it will be social housing.
Guys, thank you for listening today. This is actually the end to part 1 of my talk with Andrew. If you enjoyed it, make sure to tune in next week for part 2, as we still had quite a lot to talk about. This includes the launch of his foundation, his upcoming podcast, and what his key piece of advice would be for those wanting to get into property development. Until then, thank you so much for listening, and I will be back in your ears next week.
If you found this episode or any of our episodes helpful, please make sure to share and leave a rating to help us reach more people on their investing journeys. And of course, subscribe to be notified when new episodes drop. Make sure to follow the podcast on Instagram @Investor Intelligence Podcast. You can find links to our other socials in the show notes, including a link to the Property Mentors weekly blog. If you're ready to get your property portfolio in shape for financial freedom, check out Luke's latest book, Property Fit. You can get yourself a copy at www.propertyfitbook.com.au.